How would real economy perform through Fed's QT or quantitative tightening? What will the Fed do next? And these are the two questions everyone wants answered. It all comes down to how much money there is. At this point, there is a lot less money around. Mind you, the direction of earnings is motivated by economic activity and pushed by money availability. Now, looking at the way the market is going, we cannot do anything much and we cannot bet against the way the market is going. Now, there is a very basic backstory, a very basic backdrop that makes it very clear that you don't want to add to it until you go back and test that low again. That's what we should be looking at for the next 6 to 8 weeks. But basically, I don't see any reason why the narrative we have now should change, especially given the backstory we already have. Now, don't forget that the non-farm payroll data is due on this Friday, which is 2nd of September, and then we will get the CPI print the week after, when there is next FOMC meeting on 13th of September. So it looks like that the market will be very focused on economic data for the next 3 weeks, and market will most probably react to this data as it had been reacting to the data in the past. Now, a ray of hope for the crypto market is that historically, whenever Fed interest rates went up and the Fed was very tight, they ended up going down pretty quickly, which takes us to a point where Fed should pause. Do consider that the unemployment rate is the most important piece of information in this entire case. For now, the Fed has let the narrative be about the CPI, but the core PCE is the actual game changer. The core PCE is the data which they have stated in the past that they have been using. Now, core PCE had already hit its highest point a few months ago. I'll explain this point in a bit more detail here. CPI and PCE are two ways to measure inflation, and the Fed's policies follow those. Although we have been hearing a lot about CPI data, but it is actually core PCE that is likely to force Fed towards quantitative easing. Now, what is core PCE? Very briefly, the Fed's main way to measure inflation is through core PCE data. This is what mainly affects inflation in the long run and the monetary policy accordingly. Because of this, the committee can set a goal for inflation in the long run. Now, core PCE or personal consumption expenditure is a better measure of how well the Federal Reserve is controlling inflation than core CPI, which is consumer price index. Now, core PCE is much less volatile than CPI. Since the Fed's two main goals are to A, keep prices stable, and B, get as many people working as possible, it is not surprising that they have used the less volatile core PCE as their main measure in the past. On the other hand, the fact that core PCE prices are going down makes it even harder to believe that the Fed's monetary policy is actually working. So we know that inflation is getting a little better, but not at those levels where Fed wants to see it. But I think that when the unemployment rate starts to go up, that will be the real sign that they are going to stop or pause tightening rates and start easing them more quickly than people may realize or may think. My opinion is that this should happen by the end of this year. If it doesn't, the unemployment rate will rise by 4 months. Now, most likely we are getting close to where it should turn around. I don't know if it will be next month, but in my view, it's the unemployment rate that should be watched more closely, because as I have been consistently saying, that we don't know how hawkish Fed can stay when the economy blows up in an election year and markets are weaker as we witness them today.